So trading up your home, where do you start? There's so much to it, right? Do you buy first? Do you sell first? I'm going to get into kind of the three main options that people use to move into a bigger space. And then I'm going to actually kind of weigh up the pros and cons of each option. And then I'm actually going to give you some tips and tricks as well. If you are looking at trading up, some kind of vital little points, nuggets that will help you make the process way smoother, right? And transition to that better space that you need. So first, let's get into it. Bridging. Bridging finance is where you basically buy before you've sold, right? So you buy first and you have a settlement date approaching, but you have finance to enable you to buy and settle, and then you have time to sell. And it could be 6 months, could be 3 months to actually sell and settle. So that's not available at every lender, right? From time to time, depending on the bank and your situation, that option is easiest. You know, it's more available than other times. So it's something worth checking out. Now, I'm going to get into some of the pros and cons of that at the end of this. Alternatively, you could sell with a late settlement date and have time to buy while you wait to get the funds for what you've sold. So that's another option, right? So basically sell with a settlement date could be 3 months out, 2 months out. That gives you enough time to be able to get what you want. And then the third option that we do see is that maybe less so in this market, but depending on the market, is you buy with a late settlement date. So kind of just a reverse of basically selling with a late settlement date. But here you purchase with a 3 month, 6 month settlement date, hoping that you can quickly sell and settle before that date, right? So those are kind of the three main ways to go about it. Now, there is a fourth option, and the fourth option is kind of something that's where you basically just buy and put your old house as a rental, right? So we're not going to discuss that in detail today, and that has a whole other bunch of implications that you need to kind of weigh up. But from these three options, what are the pros and cons? So with bridging finance, basically what you are doing is you are paying two mortgages, right? So the interest costs are higher during the bridging period. That could be a bit painful. Second kind of downside, obviously, with this is that you don't know what you sold for yet. So there could be some nasty surprises, and sometimes surprises that are quite good as well, right? If the market is heading up, for example, and you get more than what you expected. So now it kind of shares that con or that downside. It shares that with the other method as well, which is where you sell with a late settlement date. And again, you could buy with a late settlement date. You could't up with the same issue where you don't know what you sold for yet, and it could be a surprise on the downside or the upside. The pros, of course, with bridging finance is that you do know what you're getting. You know that what you're buying is worth it, and that you're ready to move on, right? The same thing again when you are actually you've bought with a late settlement date. Again, you know what you bought. You feel a bit more secure. It's easier to move, obviously, your stuff, right? You're not going to be out of home, and so that is there. Selling with a late settlement date, which is actually more suitable in a market that could be a bit risky, could flip or could head down. Selling with a late settlement date means that you know what you sold for. So you know your budget, and you know you can actually make it work, but you haven't found the right house yet, so hopefully you do find the right place. How do we mitigate some of the risks here? So I think when you are looking at doing bridging finance, or you have bought with a late settlement date hoping to sell, the key thing that you could do to mitigate your risk is to add a bit of fat, add a bit of margin, right? Look at the worst case scenario on the sell and the buy price, and get your funding based on that. So when we are getting an approval and it's kind of factoring that into account, then at least we know we can weather a storm in the future. The other option, how do you mitigate basically selling with a late settlement date and hoping you buy something during that time? Well, I mean, be prepared for the worst. You might have to Airbnb it. Maybe you've got to put your stuff into storage, just in case you don't find the right home. There is one thing you can do to mitigate all these issues, okay? And that is your homework. Do your homework on the market right now. So what are houses selling for that are similar to yours? A lot of auctions are online as well. You can get a pulse of the market when you attend these auctions, even if you just watch without being ready to buy or sell. You get a feel for what your house will most likely sell for in this market. Same thing goes with the buy. So even before you've done the exercise, look at what you can actually buy. Not what people are telling you indicative prices for houses, but actually at the auction room, the house you want to buy, similar houses like that, what have they actually got the sold price, sold sticker in for? So actual sales for the sell and the buy, look at those now. Start doing your homework on those right now so you get a good feel. The good thing is when you are selling or buying, the good thing is that, you know, if you're doing it in the same market, the risks are a little bit less. If you've done your homework and you're doing it in the same market, you're buying and selling in the same market, you're not going to lose or gain too much, right? That leads me to another point. If you're expecting the market to get better later on, or worse, so you delay the buy or sell. So you've got to remember that that is very different to moving to a bigger home. What you're actually doing then is speculative. You are gambling somewhat, okay? And that is not really the thing to do, because that's not the purpose of this exercise. So keep that in mind, that this is not going to be your ticket to gain equity. Because would you go to the casino and put your house's equity on red or black? Probably not. So same thing goes with the market, right? You kind of, if you're doing it for your family home, you're doing it to do a better school zone. If you're doing it to get a bigger space, it's not. You do it in the same market and you're safe, right? I think, yeah. So hopefully that kind of has given you a bit of insight into some of the things that you should start doing your homework on. But definitely get your funding in place with someone like us, like a good mortgage advisor, up front before you sign on the dotted line to have made a commitment on selling or buying. Thanks for watching. Hamish at monline.co.nz.